Hi, everyone. Matt Kerfman here from Richmond Brothers with my trusty economic companion, Mr. Oliver, with a nice little yawn there because he knows we're going to be talking about the economy, markets, what are headlines, what things can impact your retirement dollars, and what thoughts do we have about it. All right, Oliver, thanks for your help. Thank you for indulging me. So as we head into the beginning of June, there's a couple of headlines. One, we're still very much talking and hearing about headlines around interest rates. Interest rates are remaining fairly stable, and depending on whether you're looking at a 10-year treasury, a 30-year treasury, rates have gone up a little bit, and that's largely due to kind of uncertainty with inflation and oil prices. So we'll get into that later. So there has been a new federal chair, Federal Reserve chair, announced and sworn in since my last Matt's Minute. So that could have an impact on what direction interest rates in the economy go. And there's also a question about whether the Fed remains an independent branch, not swayed by political views or the White House. And so, again, these are just questions we're seeing in headlines. Inflation is still here, and largely because of oil prices. I'll get into that. Separately, from an economic standpoint, we're looking at corporate earnings. So, corporate earnings are really what justify share prices as you kind of look at the overall stock market, the S&P 500, the Dow Jones, the Nasdaq. And in general, when you look year over year, corporate earnings are still growing at a pretty strong clip. And so that can arguably make a justification for the stock market, the growth pattern that we're actually seeing kind of behind the scenes. So, does that continue at the same rate when we look out a year from today? Do we expect that? The answer is who knows, but growth is expected. It's just at what level. And then you tie that into artificial intelligence, and the growth is expanding outside of just the technology pocket. So a lot of different businesses, a lot of different sectors, healthcare, finance, utilities, are starting to utilize artificial intelligence to gain efficiencies in what they're already doing. And what that does is it allows businesses, hopefully, to keep growing, especially when we have such a low unemployment rate. There's not mathematically a lot of people still to hire in order to keep the economy growing. So again, these are just things we're paying attention to in the headlines that we've seen in the last couple of weeks and over the month. So the question really is, are we in a technology bubble? Are we in an AI bubble? And a bubble just means things have gotten so big, like, is it going to contract? Is the bubble going to burst? And you kind of think back in time to periods like coming out of the 1990s with the internet and the technology bubble then. You look at 2007, 8, 9, you think about the real estate bubble and the financial crisis. And so, there's a lot of arguments on both sides, but I'm going to refer back to the earnings discussion. And if corporate earnings are continuing to grow, that can be one metric that's used to justify markets' continued growth. And so, again, just something we're paying attention to. Next, geopolitical uncertainty. We are still another month in, and there's still a lot of uncertainty over the war in Iran and therefore oil prices globally. And when oil prices are higher, this ties into our earlier discussion of inflation and really consumers. Consumer spending patterns account for about two-thirds of economic growth. And so when consumers' budgets are strained because we're spending more at the pump, that means we have less money to spend on other things, whether it be vacation, whether it be food, groceries, just any purchases that we might make. And so that's where the scare of inflation comes in, where that could slow down or derail maybe economic growth. So far, consumers have been fairly resilient and spending patterns have stayed strong. So, again, these are just signs that we look at for economic indicators kind of behind the scenes. We have no clue, and there really doesn't seem to be a timeline or an indication of a timeline on when things will wind down in Iran, or if they will wind down. And we make the assumption that as that conflict continues, oil prices probably stay higher. Historically, as you head into the summer, markets will typically have a pullback. And again, there's no science behind this. It's just sometimes there's a summer slowdown because there's not a lot of data coming out in the summer. There is a lot of noise, but maybe not a lot of data. So just something we want to kind of keep on the radar. If that were to happen, remember temporary pullbacks in the market are a very normal part of the cycle. We want to be watching to say, is it getting worse? Is it getting scarier? Do we need to make any adjustments? So that's where we'll be paying attention. And then also in the second half of this year, we're going to come up on midterm elections. So again, areas that could cause some uncertainty. So what our goal and our aim is as we partner with you on your financial journey is to continue to try to find and aim for the right balance in your portfolio for your own unique situation, whether it's having some assets with safety nets, some very boring assets, inside of Fidelity, where we have liquid strategies, stocks, mutual funds, exchange traded funds. Our goal is to try to continue to help work with you to find and seek out the best risk adjusted outcomes for you. So with that in mind, we've had a lot of questions, a lot of continued dialogue on our expanding offerings and holdings within your liquid Fidelity accounts. And the topic of the DocuSigns and our new strategies through AE Wealth Management. So we've had really, really great discussions that have continued throughout the entire month of May. As of the recording of this video, relative to the assets that we work with individual families on, we are now above 85% actually of the assets that we work with all of you on, individual families, that now we have access to the AE Wealth strategies. So there's still about 15% we're hoping to follow up with, have just a few additional discussions, go through any questions. If you have gotten those DocuSigns and you have not signed them or you still have questions, please just reach out to us. We're here to support you. That's questions@richmondbrothers.com. And someone on our advisory team is happy to have a one-on-one discussion. So thank you again for your continued partnership, your continued confidence and trust. Our aim is to educate, inform, and guide you on your finances, no matter what the world throws in our path. Thank you for being part of Richmond Brothers, and have a beautiful start to June.